Yo, all right. So I really only have 5 or 10 minutes. But I figured I was telling you guys how I do these live streams with my group. I figured I could show you, what I do. So if you decide you want to stick around in the group, you can see what sort of stuff I do. So I'll do live trading if the market's conducive to it. If it looks good today, I've been on absolute fire because the market was really good. My model held really well today. So I'm going to show you an example really quick, and then we'll talk about the Elliott wave thing. But I'll do live trading and live streams, or sometimes I do purely Vader University content, which is all educational topics, whatever the team wants to learn about. We could talk about it beforehand, talk about Elliott wave or Fibonacci, or all sorts of stuff. General things like risk management. Just to show you really quick, for those who haven't seen the videos I've been sharing, my Ichima model essentially just means I have 5 dynamic support and resistance levels. Horizontal supports are just lines that go across, right? So if the price for BNB goes up into this area, imagine we didn't have any of these horizontal lines because this never happened, right? Imagine this is the all-time high right here. We've never been this high. As we move up, you're not going to have any support and resistance up here, right? You can use Elliott wave. You could use Fibonacci and do Fibonacci extensions to try to find fib levels where you might hit a ratio where you get rejected, but you're not going to have prior trading ranges like here. We got a massive rejection on this run up. So right here at 31.75 is probably going to be a pretty good resistance on the way up. With these dynamic support and resistance levels, no matter where you are, even at an all-time high or an all-time low, you still have the ability to have some semblance of what you're used to with support and resistance by using these sorts of things. That's what EMAs are and things like that. So I have 5 dynamic supports, the 55, the 99, and the 222 EMA. The exponential moving average, it's different than a regular moving average. The EMA is weighted so it reacts more quickly to rapid changes in price right now as opposed to having to take a while before it actually responds. So I use those 3 plus the top and the bottom of the Ichimoku cloud. So my Ichima dynamics indicator right here uses all 3 EMAs and the 2060, 120, 30 settings for Ichimoku. This works the best on the hourly. It does work on some others, but I primarily use it on the hourly charts. I've back tested it and live tested it on the hourly chart more than anything else, so that's pretty much my go-to, especially for day trades and swing trades. Using this one indicator, you don't have to use multiple EMAs. Just Ichima Dynamics single indicator. You get all this pre-configured, so you don't have to put it in and set them up. It's much easier. That's on my Twitter bio, or my pinned tweet, rather, if you want to get the indicator. So in this case, I just entered into BNB. I'm actually really bullish on BNB long term. We could talk about that another time, where I have my model called FATAPAMP, which is FATAPAMP, fundamental analysis, technical analysis, people, and market psychology. And I use data sets to come up with different trades, short term, long term, using parts of every aspect, right? So you have fundamentals and technicals, market psychology, and then individual people. It's a whole complex thing. We'll do it in a later stream. But in this case, BNB right here, this entry, isn't part of my longer term belief that it's going to do exceptionally well. This is just a short term trade. One of the guys in my premium group spotted it. I've been busy, but he said, hey, check out BNB. Right here, we have the 222 EMA, which just gave us really strong support. Also, the top of the cloud, the top and the bottom of the cloud, remember, are 2 of my Ichima dynamics, right? So we got a really nice support right here between the 222 and the top of the cloud. So we have some confluence, plus a prior support resistance that was a horizontal one from an older trade way back, because I leave them on my trade in case we need them in the future. I leave them on the chart. So there's a lot of really good support here. Then we have the 55 and the 99, and we have the top and the bottom of the cloud right here. So we actually have all 5 of those dynamic supports within my SL range. My entry to my stop loss, I call it my SL range. My stop loss range is all within there protecting my stop loss. So the probability that it dips down and stops me out is low. It's possible. BNB actually hasn't been following my Ichima dynamics as well, so it's not bouncing off of all these dynamic supports as well as some of the other trades I've shared with you guys. So it is possible it will fall right through, but for me it's worth the risk. I'm only risking about 2.7%. So if I enter right here and I set my stop loss here, it's only a 2.7% risk, right? I've made 20% on some of my trades today, so who cares about risking 2.5% if there's a prospect for a substantial gain? So that's why I got into this trade right here. I think it's a perfect placement. It's possible we retrace further, but I don't think we're going to break through all these supports. If we do, I'll take the 2.6% loss. It's not the end of the world. So that's that. Just to give you an example of the Ichima stuff live instead of just watching my older videos. Now, the other thing I wanted to talk about was my Elliott wave philosophy. And I call it a philosophy because So my whole thing with different indicators is like some of you guys, if you're in my group and we're doing an educational stream and I'm teaching you how I do things, you very well may say like, hey, that's not actually correct. According to Elliott wave, blah, blah, blah. And I can say, great, I don't fucking care. I don't give a shit. It works well for me, right? So if you guys are able to use all these different indicators in a way that makes you money and you're very successful, I'm not going to tell you you're not doing it right. You're obviously doing it right for you, right? Based on the way you trade. You might say, I don't use combo waves. I only use ABC zigzags, which is my philosophy, right? And the reason why is because when you're doing a combo wave, you get really hung up on the lower level counts. So you're going to look at a subwave of a subwave of a subwave and see if you can get a 5-3-5 that would constitute the first leg of a double three before that becomes a WXYXZ. It's like, it's insane to spend all that time, right? It's much easier just to draw it out roughly. You don't spend as much time on it. Maybe it's not perfectly precise, but the overall job is the same. If you count this out as a WXY or WXE, WXYXZ, if you have a triple three, you can spend forever looking like, oh, that won't work. 1, 2, 3, 4, 5. Okay, I need 3 waves here, so that's not going to work. And you come up with all these alternative counts. Wouldn't it be much easier just to be like, all right, done. Zigzag, 1, 2, 3, right? ABC, it's done. Now you can move on, and you might be wrong, but at least you didn't waste 2 hours trying to come up with some crazy convoluted count just to make your whatever you think's going to happen fit. And the other reason why I don't like getting too in depth with Elliott wave, it really needs to be considered more of a general tool. And this is how I use Elliott wave. I don't look at Elliott wave. People will say on Twitter like, "Hey, you Elliott wave traders, show me one time you've actually had a wave count that perfectly predicted what was going to happen." I'm like, okay, well, I can actually. I do have some charts where like the count that I had was so insanely precise, but it's not the Elliott wave count that was precise. That's what people don't seem to understand, right? If I were to just draw this out and say, oh, this is 1, 2, 3, 4, 5. That's what's going to happen. I'm not necessarily predicting this is what's going to happen. I'm just using it as a visual tool to try to visualize what could happen in this scenario. But what's actually happening when you're using Elliott wave, you're just using other indicators. You're using support, resistance, and Fibonacci, and that is it. So when I do this and I see this is wave 1, if I'm trying to estimate where wave 3 is going to go, the most common target for wave 3 is a 1-6-1-8 extension of wave 1. So what I will often do is I'll be in the middle or towards the top of like a wave 1 or the bottom of a wave 2, and I'm trying to see what I can get out of wave 3. So I'll do this, and I'll say, all right, well, that's a 1-6-1-8 extension of wave 1. Forget about Elliott wave for a second. What if I just said, hey, we're retracing now. Where do you think we're going to go up to on the next run? You could say the same thing. Forget that this is even Elliott wave. You could say, all right, well, according to Fibonacci, if we had this initial breakout from the bottom, right? So if we started a new, god damn it, why does it keep, that was annoying. So forget about even having that count. So if we're looking at this and we say, well, it just retraced, it looks like it's going to go up again. Where do you think it could go to? You could do the same thing and say, well, from the bottom to the top of the last move up, let's measure that, right? And let's do a fib extension of that. And it's 161.8% or a 1.618 extension of that. So forget about this being a wave 1. You're just using Fibonacci extensions to try to estimate where the next leg up is going to go based on what just happened. So even without having Elliott wave at all, you have the exact same information. You know what I'm saying? So all you really need to do is use support and resistance in Fibonacci, and you can map out exactly where you think things are going to go without worrying about different counts and different waves. The waves are just a really great tool to visualize that. So is it easy for me to say, well, we started a new run here. So from the bottom of this run to the top before it corrected, let's measure that, and that's going to be a 1.618 extension of that without actually having any waves here. It's kind of hard to make sense of it. So that's the only reason I use Elliott wave is as a visualization tool so that I can visualize what I already know is going to happen just from using Fibonacci. So if I'm trying to say, well, if this was wave 1, and it's not because there's all this other stuff here, I'm not doing a valid count here, I'm just showing you an example. If I do a fib retracement of this wave 1 to try to see where we might retrace on this wave 2, I kind of eyed it out to the 50% retrace, but let's say it retraces to the 382 right here. It already did, and it hit that nice little support region. So let's just say that's wave 2. Even without having this wave here, we still know that. All we have to do is say this move up, let's do a Fibonacci, and we can see the most likely retracement is going to be the 382. I don't need to know that this is a 1 and a 2. That's irrelevant. All I need to know is we went up, now we're going down. Let's measure the up move, with Fibonacci so we can see what ratios are on the way down, and boom, there's the 382. So now from this point up, we can measure the first move up and then do a 1618 extension of that, and that's going to take us to right here, even without this being a wave 3. So if you kind of stop looking at Elliott wave as a tool that predicts what's going to happen and just look at it as a confirmation or a visualization tool that just helps you to understand what you've already established with these other tools, then you'll do much better with it. So I don't rely that heavily on EW. It's more of something that's a confirmation and a visualization tool. The more important concepts you need to master if you want to become good at TA, before you do anything else, don't learn any other indicators. Focus entirely on identifying support and resistance. Because if you're able to identify strong resistance, you will identify when you should short. And that's the most important thing you need to know, is when do you enter these trades, right? All you need to know when you're trying to figure out when to enter a trade is where the best support and resistance are. You don't have to worry about any other indicators, because when it comes down to it, when you're making that final decision, do I enter or don't I, the only thing you care about is whether or not there's a good support there that you're bouncing off of, or a good resistance that you're getting rejected from, which is when you would enter for a short. So that's what everybody should focus on if you're trying to learn this stuff from the bottom. If you've already made some progress and you know a lot more about TA, I would suggest you probably go back and do like a workshop and just focus on support and resistance. And that means 3 things. That means normal horizontal supports, be able to look at a chart like this and with the naked eye and just moving the mouse around, just be like, whoa, I just noticed when I had the mouse right here, the dotted line had a major rejection here, some major rejections here, and then that's not really that great of a support, so it's not that good of an example, but you get the point. So you can identify these prior trading ranges where you can say, oh, we got a really strong rejection here. That might be a good resistance the next time we get up there. So we did, and you can see it actually did reject several hourly candles in a row before it broke through, and that actually followed through a little bit in the same area. But identifying those horizontal supports, that's number 1. Number 2 is creating new horizontal supports, which you do by mastering Fibonacci. If you know how to use Fibonacci, you can identify future supports before you get up there. Just from this, if you were to say like this was wave 1 and you're trying to see where you can go on wave 3, not only is that 1618 extension the most probable target for wave 3 in most scenarios, but each individual fib extension on the way up will serve as a minor resistance on the way up there. And if you run into a scenario where you draw it like this and you have one of these fib extensions that happens to line up right where you already had a horizontal support, well, that's confluence. You now have 2 different types of indicators that are in agreement that this level right here is probably a support. This one was based on all the prior trading right at that level, and this one right here at 3037 is based on a fib extension from wave 1. So on the way up, this is probably going to be one of the stronger resistances that it has to get through, but there's obviously other areas where you're going to find some resistance. And then the third type is dynamic supports. So just to recap, horizontal supports based on prior price action, just looking for areas where there's a lot of resistance and support here. Super support right there, super resistance right there, right there, right there, all these candles in a row. So when we get back up there, that is going to be a really strong resistance. So there's your horizontal supports, your added horizontal supports, which you come up with using Fibonacci. And then you have the dynamic supports, like my Ichima stuff, where I have the 55, the 99, the 222, top and the bottom of the cloud. And some people use a 100 and a 200 moving average instead of an exponential moving average. That's fine. You can use whatever's good for you. Whatever process helps you to succeed as a trader is what you should be doing, and don't let anybody tell you different. If anybody tells you that you have to do it their way or you're doing it wrong, they don't have your best interests at heart. Anyway, so that's my general philosophy when it comes to Elliott wave, how I use it. That's where you should start with support and resistance when you're really trying to learn this stuff. And I gave you another quick live example of my Ichima stuff going. Just to really quickly, because I really do have to go, just to show you again, in case you didn't see the screenshots I shared before, which were kind of tight. Let's just look at, here's like MTL. So you can see my MTL entry. We went down here, bounced off the 222 EMA. Look at that. Each hourly candle, when you see an hourly candle bounce off of a support, what you have to remember is if you go down to a 15-minute or 5-minute candle, there's actually going to be 5, 10, 15 candles bouncing off of that support, right? When you're looking at an hourly candle, that includes it includes 4 15-minute candles. It includes additional candles when you go down to lower time frames. So when you have 1, 2, 3, 4, 5 candles in a row that are hourly candles bouncing right off of my 222 EMA, you know the 222 is a godsend. Like, that is a really clutch dynamic support to have. So as soon as I saw all that support right at the 222, I'm like, shit, this is my time to get in. I entered right there, pretty much right where we were, right? I mean, it went up immediately after I entered and shared it with you guys, and we shot straight up. Now we're retracing, and look where we're getting all the support, right at the top of the cloud, which is one of my Ichima dynamic supports. So I'm eyeing an entry right here. I actually should have entered if I wasn't doing the stream and wasn't trading on other charts. I would have probably caught this and entered right there, because I already posted, I showed you guys and said I want to get in right at the top of the cloud when it dips down again. I might have missed my chance. I'm hoping it does, because the whole point was I used trailing stop losses. So as we got up here, I moved my stop loss to right here and locked in 10% profit. So when it came down and it stopped me out, if I could buy in down here, it's almost like I shorted, right? Because if you think about it, it's the same thing. I actually call that personal asset short selling. We can get into that later. But essentially, it's the exact same thing as shorting. If I sold here for a 10% profit and bought it back here, I just sold it and bought it back cheaper. That's exactly what you do when you short a coin, right? So you can use your own assets to short without actually trading with margin and leverage. But anyway, so that's a live action example of my Ichima stuff. And then same thing over here on, let's pick, Link was one. Here, look at all the support. Like this is where I just re-entered on Link. Same thing. It went all the way up. I moved my stop loss up to on 50% of my position. I still have half of my position open, but I moved my stop loss up. It came down. I got stopped out right around here. 5% profit on this portion of my position, and I was able to buy back in lower. So I kind of made money twice. I made 5% because I got stopped out in profit. Then I bought in at a lower price. So if I sold right here when I got stopped out, if I got $10,000 and then I buy back here, I can buy the exact same number of coins I had, but instead of spending the 10 grand, I only spend 9,600. So now I have $400 back in my pocket, and I still have the exact same position I held over here with just as many coins. But right here, we're bouncing, again, right off of 55 EMA, one of my major Ichima supports. So I'm entering right here. If we do fail, it's possible the 99 in the cloud could hold us up, so my stop loss is just low enough that those are a potential support for me, but I'm really hoping we're going to get another one of these amazing precise entries, because I got in right here, right on the 55, and it looks like we've stabilized and got some support. So if we can push up again, I'll be very happy with that. So those are a couple examples. You guys have already seen the charts that I've shared with you. I posted a bunch of my trades, but now you can see when I'm actually doing it on a chart what I look for. I'm looking for these Ichima dynamic supports, and those are the best entries. Like XRP and XLM are retracing all the way, but when I got in, look, it was right on the 99. When I got into XLM, same thing. Oh no, we weren't actually on the EMAs there. I still got in at the same time, but we weren't on the EMAs. Quantum, I believe we were. Yeah, so when I re-entered Quantum, it was right where the 222 and the 55 EMA crossed. That's where I entered. I made the call. I shared it with you guys, shared it with my group, and boom, broke out. So those breakouts are clutch. If I'm wrong, because you can see I always, look at this, like 1.9%, 1.4%, 2.5%. I'm always controlling my risk so well that if I get stopped out on 5 of these trades in a row, and then I get one of these and make 14, 15%, obviously not only does that cover my 5 losses in a row, but I also just still made an additional 5 or 8% profit after it covers the losses. All right. Usually I do these things for hours at a time, so I'm trying to squeeze in a bunch of stuff in a short period. But if I take like 1 minute, anybody have any questions? I could probably take like 1 or 2 questions. I'm looking at the YouTube chat. If anybody's like typing in Discords. How do you choose which Elliott wave from TradingView? That's way too more in depth. So that would be like an educational stream purely on Elliott wave to dive into that level. When you're doing it in TradingView, if you're starting out, well, first of all, so I'm going to share a link for the book. There's a book called Elliott Wave Principles, which everybody uses to learn the basics. The guy one of the professors who wrote that book, his company contacted me because they know that I talk about the book a lot, and they offered me an option where they'll give anybody who uses my they'll pay me for every referral, but you can go to the website completely for free. It's 100% free, but they still give me $1 or something for every person that goes, and you can go and get a digital version of the book completely free, and I get a little dollar. I get like a $1 or $2 for every person I send. So I'll post that link, and you guys can check it out. But the book by Frost and Prechter, those are the two authors, goes over all the basics for Elliott Wave, and you have to learn it from the ground up. You can't just start doing Elliott Wave and just start thinking you can trace lines. You really do need to practice. Just so everybody knows who doesn't know me. So I got wrecked when the market crashed, lost an insane amount of money, and I took out all the money I had left at that point. I sold everything for a loss. When people say you don't lose unless you sell, that's stupid. I will call that out till the day I die, and I'll talk to you guys more about that later. But I sold what I had for a loss, took my capital out. I kept that capital safe and protected it, so when I was ready to put it back into the market, I'd be ready to go. And then I spent the next month and a half doing nothing but studying and researching trading techniques, different indicators, technical analysis, fundamental analysis, how to use market psychology to your advantage, everything. I looked at everything I could possibly find, every video, every book. I practiced on charts for 10, 12, 16 hours a day sometimes. I would read a book, I would watch some videos, I would do charting, and I would do that from the time I woke up to the time I went to sleep. And I was self-employed, so I had the time to do it. And once I was able to paper trade enough where I was making profits every day paper trading with fake money, once I could do that consistently, I put my money back into the market, and I was able to make back everything that I lost, and I've been trading essentially for a living ever since. So it doesn't mean that everybody could do it, but if I was able to do it, most of you guys could probably do the same thing. You just need to dedicate the time to learn this stuff from the ground up. It's going to be a lot of reading, a lot of videos, working with somebody like me who can help guide your learning process. But if you're really dedicated, you can learn this stuff. It's definitely doable. Don't just try to jump in and think you can pick it up in one day, because that is not going to happen. All right, man. Sorry I can't do this for longer, but I will do another stream, especially since we're doing the whole new group, and all those guys, all you guys don't really know me well. We'll do 1 or 2 more of these before we fully launch the new group, so you guys can familiarize yourself with me and learn how I teach, and then you'll see if it's right for you, because we are going to have like a basic level, and then the next level of the group includes this sort of stuff, educational work and streams, stuff like that. And the top tier would have like one-on-one phone calls or live streams if people need personal guidance on what they have to learn or what they need to focus on, or sometimes how to strategize to come up with the best plan for their own portfolio. So we're working out the details on how that stuff's going to work, but I'd like to share as much as I can with you guys in the next week or so before then, so you can get an idea of, what would be the best path for you. Anyway, thanks for stopping by. Appreciate it. We'll do this again tomorrow or sometime soon. I'll be in the Discord, though, if you guys do need me for a little bit. All right? Later.